Hey there, John.Hunter, your mortgage hunter, coming back again with another rate update. This one for the week ending in August 2nd. So this week, the data finally caught up with the reality that the rest of us knew about the economy, and rates improved markedly. So 30-year fixed today is running around 6 1/8 to about 6.875. FHA 6.375 to about 7. 15-year fixed 5.75 to 6 1/4. VA 6 1/8 to about 6.875. Down payment assistance 6.75 to about 7 1/8. These are all trending down right now, guys. So we'll just keep an eye on it. Hopefully this trend continues in earnest, but today was a pretty big day. We saw about a 0.25% drop across the board. Well, what's driving it, right? So last week we talked a little bit about unemployment again. So we got a weak report last week. The market has been pricing in about 98% chance of a September cut. Well, the Fed met this week. Of course, they did nothing. Nobody expected them to. But what they said was basically all but confirming, excuse me, a September cut. So fast forward to today, and we got another unemployment report that really just sealed the deal, right? I've been saying for months and months that this rate cycle, the end of the rate cycle, is hinging on the employment. And when the employment showed a little bit of weakness, the market would change gears. And that truly happened today. So it's rarely an event, right, on the interest rate market. But this one seemed to be somewhat today. The market went crazy. The unemployment came in really low. The unemployment rate jumped up to the highest. We've seen 4.3%, highest since 2021. The consensus on the market right now is the Fed overshot. That they've kept the rates for too high for too long, which I'm sorry, we've been saying that for months, right? I really thought May would have been a sweet spot for the Fed, but of course they didn't. So what is the market thinking now? So not only did they confirm a September cut, now the market is talking today about a November cut, in addition to the December cut they've already committed to. And more importantly, that they're saying that the September cut, because the Fed is now getting a little nervous that they kind of messed up here, the September cut could be double. So it could be 0.5%. And so what does that really mean? That means that the cuts the Fed has been committing to was one cut for 0.25%, and now the market is starting to price in a full, a full 1% cut before the end of the year, a 0.5% cut in September, a quarter in November, a quarter in December. And that's assuming, guys, that the news doesn't get worse. But hey, I've always been taught when you see a trend, you must assume it's going to continue until something shows you it's not, right? So I believe the trend of bad economic news showing that, add to it, the factory orders came in lower today. So everything is showing the weakness in the economy, that we're heading into a recession. There's all kinds of bells and whistles going off on the stock market on this. We've been talking about it forever here. The Fed has a history of doing this, right? This is not their first rodeo. They've never gotten the soft landing right. I've been saying that for the better part of 2 years. Like, don't listen to the news. They've been talking about a soft landing and all of this. It doesn't happen. It never does. It's like driving, looking through the rearview mirror, really, is what the Fed's doing here. And it shows. So I believe that we're in for a little roller coaster. You're going to see some crazy headlines, I think, in the coming weeks. You add to that the wild card of the election, which the reality, guys, I don't care what side of the fence you're on. If Democrats get in, it's bad for rates. And if Republicans get in, it's good for rates. That's just the way it is. You may not agree, but it is the way that it is. So the wild card is the election. But we're going to have a bunch of economic data over the next coming weeks that are going to throw gas on this fire, I believe. Which, honestly, if you're looking at buying home, refinancing, financing anything, if you have a credit card, if you breathe air and live in the United States, this is going to benefit you. I do believe that this cycle, which is the second longest where they've left rates unchanged in their history, so I believe it's going to be about over here in the next 30 to 60 days. So all great news, guys. You know, this is what we've been kind of waiting for. The market shifting a little bit. I think over last week, I think the rates are at least 1/4 to 3/8 better. You know, rarely do we see a 1 week improvement like that. And we really hope that it continues. So, hey guys, if you're interested in refinancing, you want to find out where that that sweet spot is for you. I did a lot of that today for people, where people were saying, hey, I've heard rates are dropping. Where are they? When does it make sense for me, right? If you just want to figure out what that point is, no obligation, of course, where I can say, hey, when the rates hit here, it starts to make sense, right? If you're interested in that, give me a call. I would love to help you. Have some other interesting videos coming out next week, so please come back, join me. Every Friday is a rate video, so like, subscribe, and hey guys, have a wonderful weekend. Happy Seafair if you're up here in the Indiana or in the Washington State. Seafair weekend is this weekend with the Blue Angels. It's going to be fun. So hey guys, enjoy the sun. Talk to you soon. Bye bye.